We are with topic 3. And you would learn something in this topic which you may find it useful later. Okay. This has to do with the money market. And I'm going to talk about Indian money market, not really other money markets. Now, I gave an introduction to something called a financial system, why it exists in every country and why it's important. Because financial system serves as the, how can I put it, as the, you can say the intermediary between two very important groups of economic agents. One hand, you have the savers who have excess money left. They did not spend enough. On the other hand, you have deficit units who are spending more than what they have. You take a company building a thermal power plant. Do you think they have the money to build the thermal power plant from their own money? No. So they have to go to the financial system to borrow money, to get the money. So financial system is very important. Now, every country develops its own financial system. Two broad subsystems that exist in any country, you can say, if you generalize, is you have the money market and the capital market. But if you go into the details of the money market and the details of the capital market, you will see they are quite different across countries. All right? So later, when you would mature more with more courses in economics, you can learn about the efficiency of the financial system, why financial systems are efficient, how it can be made efficient. You can get into numerous issues, very important ones. For the time being, we would focus upon only money market, because this is a course titled Money and Banking. What's the point in going into capital market? There is no mention of stock market, shares, etc., nothing. However, I would like to tell you a brief of some preliminary things, even if I may not be teaching capital market. The one thing that you noticed in the previous class, that the system deals with money, credit, and finance. Three different words. I will come to the meaning of these words. Money, you have seen some money, a definition of money in terms of Indian monetary aggregates. In the first topic, I defined money, why money was invented, the historic process of development of money. I talked about that too. But now we are coming to actual use of money on kind of a short run basis in the economy. Credit, you understand this stuff, because banks are the ones who lend out money, credit. And then you have the issue of finance. This word has been added to this system since the corporations or corporate companies were invented, because this finance has to do with the corporate world. And the primary emphasis there is on equity finance. You can also have debt finance. Like governments, they can sell bonds, which are called debentures. When companies sell bonds, the traditional title is debenture. They don't call bonds. Governments, semi-government organizations, electricity boards, railways, infrastructure related institutions can sell bonds. But when it comes to private companies selling similar things, they're called debentures. And there are various types of debentures also. That you learn in a course on capital market, like financial economics or something like that. Now, if you look at the Indian financial system, if you summarize that, I give you a slide. I didn't bring the slide today. You realize that the three major corners like a triangle in the financial system. Number one was, the first one was financial institutions. Number two was financial markets. Number three, financial instruments like shares, bonds, debentures, etc., through which money changes hand from one party to another party. All of them are equally important, because without good financial institutions, markets will not run properly, and good financial instruments will not come into existence, because financial instruments are developed by the financial instruments are developed, created by the financial institutions. All right? So they are all connected. Then I didn't talk about financial instruments because this topic would cover a lot of money market instruments, this topic. Now, financial markets, you saw, as I have told you, money and capital market, and both of them can have the organized and unorganized sector development, particularly in a country like India. In India, the money market, unorganized money market is quite large, but unorganized capital market is also there. Then you have primary and secondary markets. Every market has a primary section and secondary section. Basic differences: in the primary market, like any goods, fresh goods are sold. Secondary market means second-hand goods are sold, used. So I bought a share today, I don't like it, I can sell it tomorrow, goes to the secondary market. Stock exchange indices, very interesting, which are reported on a daily basis across countries to kind of tell you how the economy is doing, how the stock market is doing. Amazingly, that's not a primary market data. That's all very much a secondary market data. Stock exchanges are secondary market data. They're all old shares, bought and sold, bought and sold. All right. Now, if you go into the financial institutions, there also we will study a few in the next topic. Money market institutions. You have the intermediary and the non-intermediary type, which are the two main groups of institutions. The intermediaries are who intermediates between the savers and the investors, like banks. We have surplus savings, we go to the bank, keep them. Banks give the loan to the firms. Classic example of intermediary institution. But banking institutions are just not the only intermediary institutions in India. You have non-banking institutions who also does an intermediary job, like non-banking institutions like IDBI, ICICI, infrastructure development companies who give out loans for development, etc., but also they collect themselves money to sell of bonds, etc. Okay? That means they are collecting the savings of the economy directly. So when you have that option, you can either go put your money in the bank or go and buy the bonds. They are serving an intermediary between you and the investor, not via bank, but via them. So you have non-intermediary, non-banking intermediary institutions, remember that. Not many, but there are. And there are pure non-intermediary, non-banking institutions, pure non-intermediary, who do not go to the markets to get funds. They are directly funded either by the government in India or RBI. The example is NABARD. The example is state financial corporations. The example is subsidiary of IDBI, SIDBI, which you have one on campus. The examples, there are many examples. And these non-intermediary group of financial institutions, one is the intermediary, which are of two types. The non-intermediary group has been, I used to know that as, oh, I forgot to tell you a classic non-banking example in India, classic example of non-banking intermediary institution, massive. I forgot to tell you the name. LIC. There is a story, it goes, if the stock market is not doing well, inform LIC it has so much cash every day. It can just walk into the stock market depending upon what you want to do. You want to buy shares, share prices are going down. It can just lift the share prices, but just if it starts buying shares. That amount of cash it handles every day, massive, that it can go and change the direction of stock prices in Bombay stock market or any other stock market in India. There are a couple of stock markets, a few. Bombay Stock Exchange is most famous. Then you have National Stock Exchange, etc. It has so much cash because every day with the policies they sell, the premium comes. That cash, that check. So I forgot to tell you about LIC. I am trying to give you examples of IDBI, ICICI. तो छोटा है, बच्चा है. So non-banking intermediary institution, LIC is the largest in India. That's a non-intermediary institutions. Now, when I started reading up on this material a few years back, I came across a term called Development Finance Institutions, DFI. The development finance institutions are essentially funded by an external organization, an institution like government, RBI, World Bank, IMF, Asian Development Bank, and helps in the development of a country. And they take up specific tasks: heavy industry development, medium scale industrial development, small industries development, SIDB, small industries development. SIDB is what? Small Industries Development Bank of India. It's on our campus, not developing industries, helping you out with these technological improvements, etc., that you may do, patent, etc. But what it is Small Industries Development Bank of India, created by IDBI, the father, the parent company, Industrial Development Bank of India, which was created by RBI and Government of India. So I used to hear about development finance institutions, which develops a particular area of the economy. Famous development finance institution in India, famous Exim Bank. Have you heard of Exim Bank? Export Import Bank, DFI. That's a DFI. Acha. Now, in Professor Bhole's book and on RBI site, I found RBI has started using a different language, a title for them. They are calling them NBSFO. Let me write it. They're calling them NBSFO. I don't know why the name changed. They keep on changing things. NBSFO. Non-banking statutory financial organizations. बाप रे बाप. DFI तो अच्छा ही था भाई, छोटा नाम. Development finance. There's some distinction between DFI and NBSFO. I haven't figured that out yet. And the other group they are calling RBI, the old name, NBFI, non-banking financial institutions. Non-banking financial institutions, if you change that to non-banking financial intermediaries, not institutions, intermediaries, then you can see the group I'm talking about. One is the non-bank intermediaries, one is the non-bank statutory financial organizations, which are not intermediaries, which I used to call DFI, which in your slide that day I said there are non-intermediaries. So if you talk about non-banking institutions in a country, there are two types. One on the intermediary type, RBI may be using NBFI for them these days. But we used to call them intermediary institutions. Anyway, forget about it. Within non-banks. अच्छा, और जो हम लोग कहते थे DFI, Development Finance Institutions, RBI has given them a new title. They call them Non-Banking Statutory Financial Organization, NBSFO. Okay? Careful. So don't get confused when you start reading the book. Now, I will not talk about these non-banks, any type, because that will be enormous. Because once I drew a tree for a slide like the one I showed yesterday for non-banks, and I couldn't type in all the titles, all the types there in one slide. वो सब एक स्लाइड में आ नहीं रहा था, इतना है. Particularly NBSFO इतना हो गया अभी देश में. I couldn't just put them there. Infrastructure development something, and you know export import bank तो था ही, IDBI ICI वो तो है, private sector public sector वाला, और बहुत कुछ आ गया. Many are there. So I just couldn't put them. So I do not want to touch that unless at the end of the course there is time. I can take up a few, and you might be interested. What do they do? Like the GIC companies, you know there are 4 of them. What are the 4 names of the GIC companies? TV में ad आते हैं किसी किसी का. New India Assurance. सब नाम देखा? 4 companies are there. एक तो न्यू इंडिया एश्योरेंस है, एक है नेशनल इंश्योरेंस कंपनी और ऐसा कुछ नाम है, 4 है. Government nationalized them, put them together. Acha, we will talk about that later. A general knowledge thing. You know why GICs they are different from LIC, right? You know GIC different from LIC. Tomorrow you get a job in Bangalore. First thing you do when you get a flat and buy things, go to a GIC company, Government of India companies, anyone around, and buy a policy to secure your goods. Office में गए, मकान आए, सब चोरी हो गया. Get the insurance for your goods. Your music system, your clothes, your washing machine, your fridge. This is GIC. And LIC is life insurance. You understand that. That's the basic difference. We have 2 very well developed insurance markets in India. I need not go into that's again another kind of, you know, the theory and all that are quite specialized. Now, after having financial institutions, after I talked about the intermediate, which RBI is calling NBSFO these days, then I mentioned, if you look at the table, if you have with you, regulatory institutions. Now, I think there are 2 regulatory institutions with respect to the financial markets in India, or at least 2 major ones. There may be minor ones, I'm not sure. RBI for money market and SEBI for capital market. Securities and Exchange Board of India. 2 regulatory institutions. I will not talk about SEBI, but I will definitely talk about RBI. Now, there is the final tree ends with a branch, last branch, end of the last branch of the institutions, other, I have written. This other have become very important. The other group has become very important. You have here credit rating agencies, I told you, the hospitals for companies. Go to the hospital, get a health checkup, come back with a report, and your employer wants to see the report. What's your blood pressure? What's your sugar level? How is your eyesight? All right, etc., etc. Credit rating agencies have become important worldwide. Even they rate countries these days. International credit rating agencies like Standard & Poor. You heard of Standard & Poor? On TV you will see. Standard & Poor is a credit rating organization which these days rates countries. And when they publish a positive or a negative result internationally, दिल्ली में मारपीट शुरू हो जाता है. Opposition, but if it is negative view, opposition बताता है देखो इंडिया का हाल क्या हुआ है, and the ruling party goes into a defensive mode. No, it's not that bad. Maybe they are saying it, but you won't believe me how influential, how important they have become in the just last 10 years, 10, 15 years for India. For India. You won't believe me, it wasn't there at all. Because I lived through these years, unfortunately, with this economics, etc., and newspapers, I could, see something. It has become so important. Some organizations like Standard & Poor, etc. The credit rating agencies are essentially, they give you won't believe me, like a grade. AAA. Open CNN. The other day, they were showing the credit rating of the central bank and the countries like Spain, Italy, Greece, and how they are downgrading them. They have credit downgraded of Germany also recently, unbelievable. The strongest nation in Euro, they have downgraded it. Because of all this trouble going elsewhere, Germany is facing the wrath. जॉइंट फैमिली बना के बैठे हैं तो पिताजी बस फैमिली में कोई जाएगा में प्रॉब्लम, पिताजी का हाल खराब, फाइनेंशियल ड्रेन and all that takes place. Acha. So European Union is nothing but a joint family system. Very simple terms in monetary union. Unfortunately, it's not a fiscal union. They would have had less trouble anyway. That keeps on going on. They're companies. Certified by the central bank. Depends. If it is operating in European Union, it will be Euro Bank. If it is operating in India, it will be Indian Bank. Indian credit rating agencies are like CRISIL, CRISIL. What authority does IMF have to talk about India? That kind of a question you ask him. Ignore. Ignore. That's what politicians say if you don't like it. What authority does IMF have? Does India have any loan from IMF now? It used to have. Then it had an authority because it makes sure that the loan is utilized properly and returned. India doesn't have any outstanding loan with IMF. But also, what authority does IMF? That kind of a question is an open-ended question. But credit rating organizations, these organizations have created status for themselves like that. They are accepted by most countries. Yeah, yeah. Because it is backed by central governments or central banks of various countries, it acquires. If I get knowledge and USA recognizes me, Germany recognizes me, immediately my market value goes up. That's it. Very simple. But if you talk like politicians, there is a negative result that has come. Who cares? It's a foreign institution. How much do they know about India? If you argue along that line, I'd rather keep quiet. Yes, okay, maybe. But the point is they accept it. But a credit rating agency is like a non-bank. It doesn't do banking activities. It does something else. And I put them other because they have no financial kind of a dealing that way, in that sense. All right. Now, these Standard & Poor, etc., they are not only credit, they are multiple activity institutions now. They do various kinds of things. Now, these institutions come into existence in India via RBI permission, just like banks. Bank, you want a registration to be done. You want to open a bank. You have to get a registration. It will be given by RBI. Credit rating organizations are also created by RBI in some sense, or permitted. Not created, permitted. Permission has to come. You want to open a private company, private limited, public limited. You have to go to the company board and obtain the registration, a license-like thing. Otherwise, you won't be able to operate. Okay? Even private small cooperative societies require licenses. I will talk about cooperative systems later. That also I have a little bit. Very interesting. Acha. Now, in India, these other institutions, one of the most famous one for our case, money market, money bank, money and banking course, is called DFHI. DFHI. This has become very important. DFHI is Discount and Finance House of India. I will talk about that later. Discount and Finance House of India, DFHI, has become very important. Then you have these credit rating organizations. There are many other organizations. Now, I have talked about the primary market and the secondary market. I am coming to the markets. Instruments I will take up in details. When you talk about the primary market and the secondary market, you know that in a bond market, the risks are less because the bond always issued by somebody whose name is written, and it says it promises to pay you a return, interest income or coupon rate or whatever. The problem is, if you go to money market, uncertainties are there, risks are there, not so much. But if you go to the capital market, there is a lot of risk. Now, since I would be talking about money market in details, if I can keep aside money market right now and talk about the capital market, there is a name for the capital market which is called the securities market. Now, the word security means both shares and bond/debentures. This capital market has another name called securities market. And this securities market means they are dealing with both, remember, security means both shares and bonds/debentures. All right? Gotcha. Now, these days we call it capital market. Earlier they used to be called probably securities market. Old name. Now, what I want to tell you, I mean, these are the things you come across. This securities market again has two kind of groups. This is a conceptual group. It has nothing to do with the location, like a market doesn't have a location. Market can be anywhere. You can talk about the Indian apple market. So the apple is not sold just in Delhi or Kanpur. Apple is sold all over the place. You have to consider everything. So this has one name called industrial securities market. Industrial securities market, where you're talking about the private sector only. Industrial securities market, private sector. Okay? They may be selling shares, bonds, debentures, whatever. Private sector. Another side of the securities market, you have the gilt-edged market. It's also part of the securities market or type of securities market. The gilt-edged market basically means, gilt-edge means, if you open dictionary, risk-free. So what are you talking about then here? An amazing securities market where whatever is sold is risk-free. What is it then? Who operates in that market? When it is risk-free, who operates? If it is risk-free, gilt-edge market means risk-free. So who operates there? So industrial securities market is the private sector market. What you see in the Bombay Stock Exchange happening, etc., the numbers, they refer to the industrial securities market. But the gilt-edged market, what does it mean? Risk-free government securities market. Government can sell all kinds of things, treasury bills, government dated securities, which are also bonds, various kinds of things government can sell. Okay? It's okay to ask any question. Don't hesitate to ask me any question. Sometimes I may stop you because I'm in the middle of something, then I will halt and then answer you. So gilt-edged market essentially means risk-free market, because the other market is extremely risky. You don't know what's going to happen to share prices tomorrow. All right. Now, you will find in the money market as well as here that there are various kinds of risks involved. and there's a various kinds or various degree of risks involved, and we need not go into it. I'm talking about here all risky stuff and here zero risk stuff. That's all. But you can go into the gradation of risks later. In money market it also happens. Now, another important thing that comes up often is, and risks, as you know, you will learn that in financial economics, the higher the risk, higher the return often is assumed. The higher the risk, maybe the lower the degree of liquidity maybe of an instrument. Quickly you cannot sell it. It's very risky. People won't be hesitating to buy that. So you can find associations of risk, return, liquidity, and you can get into very complex situations. And you can have mathematical models dealing with them. In fact, they do that. Some of the projects I'm supervising now, one of them is looking into that, probably. What he or she said, I've forgotten. 5th year MSc economics projects. So they are interested. Economics students get very interested in that. MBA department offers a number of courses, very important ones. But I don't know whether you get admission there, registration there or not. Then I want to talk about a very confusing area in this literature is short-term and medium and long-term. They make a distinction. Short-term, in macroeconomics you know that, it happens. And medium and long-term together. They make a distinction between these two, short-term, medium and long-term. Short-term is a typical feature of the money market that you will study, short-term. And the short-term is defined something which has a maturity of equal to or less than 1 year. And money market is full of instruments which are short-term. So many people prefer to call the money market the short-term financial market, and the capital market the medium and long-term financial market. Can call that. Now you go to more than 1 year stuff, an instrument matures, a bond or whatever, shares are many years. Then you get into more the capital market, medium and long-term in the financial market. Typically you will see that. You don't see very short-term instruments in the capital market. Never. Money market, they're full of them. And you don't see very long-term ones either. Now, when you go to the capital market, it switches completely. Yeah. This is another thing which you should remember. And usually the medium term is between 1 to 3 or 5 years, and more than 5 years they call it long term. I'm not so sure about it, but this seems to be the practice. More than 1 year, but less than 3 or 5 years is medium term, and more than 3 or 5 years is long term instruments. 1 to 3 is roughly the medium term, more than 3 is long term. This is what they do. Achha. Now, before I come to a description of the money market, which I want to do, I'm just setting up the platform for it so that you know these things. I've already talked about the primary and the secondary markets. Every market has a primary and secondary market. Whenever there is a primary market, they have certain institutions functioning. Whenever they are the secondary market, in any market, money market or capital market, they have certain institutions functioning. Secondary market, typically you will find the dealers and the brokers functioning, middlemen. Oh, आप बेचना चाहते शेयर, मैं bond जो भी हो, ठीक है मैं देख रहा हूँ कौन खरीदना चाहते हैं. At the time transaction is over, he keeps a commission called a service fee and goes. What happens in the property market? A lot, abroad particularly. In India it is also developing. The realtor they called, real estate agents. Real estate agents essentially intermediates between the buyer and the seller of a house or a property or a land. Secondary market, but typically these middlemen operates, middle organizations called brokers and dealers. Money market ho ya capital market particularly. The primary market में what you have is something very different. Its role is very different. They are called primary market operators who makes the markets function. They are called underwriters. Underwriters. It's like you want to file a case in the court. What do? Do you file a case in a court handwritten? साहब मेरा ये केस है, कितना फी जमा करना पड़ेगा, इसके अगेंस्ट मैं फाइट कर रहा हूँ इस कारण. What do? You get in touch with a lawyer. Companies want to sell shares, they get in touch with underwriters. Then they sell shares. And there's a gamut of legal obligations. न्यूज़पेपर में अनाउंस करना पड़ेगा, क्या होगा उसका स्ट्रक्चर, एक बुकलेट किताब के माफिक बनते हैं कंपनी का, which is called IPO, initial public offer. How much, what's the amount, is a public limited or private limited company, who can buy, at what price will they be shared. In a big company, advertisement, for IPO advertisement I've seen on newspaper, there are at least 5 or 6 underwriters. That means there's a big guy who is fighting a case. It's so complex and mammoth that there are 5 lawyers who are working for him. 5 or 6 underwriters involved with a company when they're going for an IPO. Big company like Tata Steel going for an IPO. There will be, you know, mammoth size. It has an international offer also probably. It has a domestic offer of shares, and there are 4 or 5 underwriters involved. Now, how would you know, sir, who underwriter hai? ये underwriter actually are companies hai, which we called this job, today's language, this underwriting job. What will be the legal issues, how that brochure will be written up, you know, initial public offer, the literature, what kind of permissions are required, credit rating agencies, certificates are required, the gamut of it. Company just gives the money to another company called underwriter who does the job. It doesn't get into that. And it depends how good the lawyer is, the better that the system functions. Now, many of you will get job tomorrow in these companies. So, you would say, sir, तो कुछ पढ़ा ही नहीं, underwriting job इतना complex है, बता के छोड़ दिया. This underwriting job is now have taken up 2 names in the world. These companies are called 2 names. In US, they are called investment bankers. In Europe and particularly England, they are called merchant bankers. They are not commercial bankers. Bank word hai, non-bank institution hai, but they are not called they are called investment bankers and merchant bankers. So these banks, these are called banks, amazing companies. They are non-banks. They are not commercial banks. They do all these kind of things. So this is an important information I'm giving you. Many people know probably in class, but some of you don't know, so I'm giving that to you. But when you come to the secondary market, इनका complication नहीं है. वो तो एक individual share बेचना चाहते हैं कि खरीदना चाहते हैं. एक कंपनी का इशू नहीं आ रहा है. कंपनी सेलिंग शेयर्स हो नहीं रहा है. छोटा छोटा अमाउंट उधर में ब्रोकर और डीलर काम करते हैं. वो दिन में जितना कमा पाते हैं डेली वेज के माफी कमा लेते हैं. Some of the brokers and dealers are big. They have established themselves a big, even so big that this one guy called Junjunwala is on TV often, discussions. This fellow is nothing but a broker in the Bombay stock market, but his company has become so big, and if you look at him, you would know that he's earning a lot because his weight is nearly 300 kg. He's making a lot of money and getting fat. And this person is also on TV. I'm not joking, but he's a famous broker. So some of them are very big, but you have a host of very small players there. ये इतना बड़ा बड़ा बात नहीं है, ये बड़ा बाबू का बात है. When it comes to secondary market, the personality completely changes of the capital market or the money market. And in money market also you have underwriters today. Government of India wants to sell treasury bills. Earlier RBI used to do that, but these days they go to the underwriters. And money market underwriters have a name in India today. They are called primary dealers. I will talk about that later. Money market underwriters, they have a famous name now, typical name. They are called primary dealers. देखिए money market में इतना complex नहीं है. Capital market में, share market में immensely complex. It's all right if I kind of tell you one more point, just one more point. When an underwriter takes a job, it also takes the responsibility of selling a minimum public subscription. Minimum public subscription, MPS. When he takes the job of selling your company's share, the company tells the underwriter, or the underwriter gets into agreement that minimum this amount has to be sold. Otherwise, no share will be sold. Maximum has an upper limit, but there is a minimum limit also that specified. Minimum public subscription. Company A is selling shares, 1 lakh. Minimum public subscription is 10% of that, which is 1,000. If 1,000 is, no, sorry, 10,000. If 10,000 shares are not sold, it will be called back. Nothing will be sold. So often there is a minimum that has to be sold. And underwriters have to make sure that it passes the test, that the minimum is sold. बहुत झंझाट है इधर. अंडरराइटर रुपया खा लेंगे, बैठ गया. ये तो भी हो सकता है, इंडिया में तो सब कुछ हो सकता है. 10 शेयर भी बिके नहीं, कंपनी तो हो गया, इतना खर्चा किया इनके पीछे. So there are all sorts of things. I am not really giving you anything. I'm just floating above the iceberg and touching it and telling you this is what you see here. If you go into it, it's enormous, massive. A whole area opens up. So my job now is to get to details of money market instruments. It's coming up tomorrow.